That's awesome. You know, a long time ago when I did the classes here in the studio, one of the ladies was responsible for setting up YouTube studios all over the country. And she had asked if I would do a bigger place and then could make it like a creator's warehouse kind of thing. I swear, yeah. She was a tough lady. But we had to foot the bill to build it. And it had to be all like, colorful and stuff. Like, I'm kind of like into the old, jazzy looking thing. But she, nice lady though. I mean, she was very like corporate business. Like, she got down to it quick. And that's flattering, but I'm just a little old guy here, This is my thing. Hey, welcome to the Closing Beat. Happy Monday. How you doing out there? This is our stock market update show. Looking forward to Mondays always. I like being back, talking the goods, working with you guys here. I'll do like I always do, and I'm just going to share everything with you, maybe teach you something new. We'll take your questions there as well. But we are financial advisors here at Jazz Wealth. Not currently taking clients because we're working on some cool stuff. But hey, you can join us on the research site if you like. It's $13 a month if you want to join us, and really cool. We try to post a lot of good, interesting research. Sometimes it has to do with things that we're already looking at, but a lot of times to try to teach you how things work, to kind of show what's going on out there, and teach in a way that allows you to go do something right away. And soon we're going to be offering our office trades in there. So we are all sort of trading here active in the short term while we manage the long-term stuff. And we're going to share that with you and maybe make a little fun competition out of it and see, who does better and all that, and kind of see how we do things, hopefully with some educational lessons there. Also, every week we do a wine and wealth class. For the last 2 weeks, we've done trading strategies. Really cool 2 classes if you are one of our clients. This week, we're going back to the planning and the geeky strategery around making every dollar count, actually. So we're going to talk about how to actually use the software that we use to figure out your safe withdrawal rate. And I've also got some updates and stuff that I want to share there as well. Wine and Wealth for us is just like a hangout class. We built an actual bar. We call it the Speakeasy. And we just kind of hang out with clients every week just to let you know what work we're doing or some way to help improve you getting your dough straight there. So I hope you'll check that out if you are one of our clients there. Hey, tomorrow is the anniversary of the low, the virus low, down here, March 23rd. It's 1 day away right here where we hit the lows. And I just thought it was kind of interesting to take a look at a few things there before we get into the markets. The average gain, if you look at the S&P 500, the index itself has grown, of course, and done really well. But the average gain of every stock in the S&P 500, if you take out all the double-classed shares there, is 104%. Can you believe that? The average gain of a stock in the S&P is 104%. That's intense, man. Pretty cool. There are only a handful of stocks that are lower. Gilead is one of them. I think it's down like 10% since the March 23rd. Yeah, it's down about 10% since the March 23rd low. And then there are 2 others as well. Can you guess? Does anybody want to guess? I'll let the stream catch up for a second. I want to know, do you know what the best performing stock in the S&P 500 is since this low? So from the March 23rd low until today, what's the best performing stock? I'll give you the top 3 of them, and I'll go backwards so you guys have a chance to guess the best one. The third best performing stock in the S&P 500 is Limited Brands. Written off for dead. Victoria's Secret with all their inventory issues and all that. But we know that it's Bath & Body Works. I've done some explanations on how this company works and everything, what they are. Bath & Body Works is actually carrying the load for them. All the action is over there. They're the third best performer since hitting that virus low. You could probably guess, Tesla was one of the guesses there. Nope, Tesla comes in second place. That is the second best performer. At one time, it was the best, but at the moment, as of the eve of the virus low there, Tesla comes in second place there, and Waste Management was the guess for first place. No, a good guess though, but no. GameStop? No, that's well, no, that's not an S&P stock there. The best performer, which I happen to be short at the moment, is Viacom. Viacom up over 760-something% since hitting its low back in March 23rd of last year. Etsy comes in fourth place, by the way, so Andrew's got a good guess there but that is impressive. Viacom with the biggest gainers there. As far as the markets today was a day of large cap growth stocks leading the way. If you look around there, large cap growth easily beat every other factor of the market today, and I'll go through some of the names as we go through them. I'm going to start with the Dow here. The Dow's up about 7.5% year to date. I'm not quite prepared there. We'll see. Okay, so the Dow up about 7.5% year to date. Semiconductors did well today, as you'll see in some of the other indices. But you've got Intel as your biggest gainer there, and Apple, and then the large cap growth is kind of all the excitement there. Microsoft at one of the better performers on the day as well. The downside of the Dow today was financials, really. Just JP Morgan. There we go. Financials as a whole took a break. We'll cover that in our sector breakdown. Goldman Sachs a little bit lower. And Travelers, if you want to lump that in there a little bit. Nice little pullback there for those. If we go over to the NASDAQ here, the NASDAQ is actually up about 2% year to date. And if we take a look inside of there, the weakness was the reopening stocks, right? So Expedia, one of the weaker stocks out there, not a problem. It's had such a great move. Nice to see that moving higher. Booking Holdings, which has been in the news quite a bit lately. They've been awfully vocal with what they've been posting. Down about 2% today. Great pullback on Bookings, just an expensive stock. Alta Salon also pulling back a little bit, but as you go through, anything that had done well, like last week with all the reopening moves, like Marriott, that one was also down on the day. And if we head towards the top of the performers today, or we try to, you're going to find a lot of semiconductors in there, right? KLA-Tencor, AMAT also higher, one of the better performers out of them. CSX higher today due to Kansas City Southern's news we'll cover. Lam Research, Microchip, all of these semiconductor stocks doing well on the day. If we go over to the S&P 500, which finds itself up about 5%, 5.5% right in there somewhere. Your better performers today are going to be semiconductors, the same names I just mentioned, CLAC, AMAT, and the like. You're going to have Kansas City Southern as the best performer today as they're getting bought out. We'll cover that. And Dexcom, there we go. Maybe a little recovery on Dexcom after being a little oversold there. Ball Corp also trying to come out of a downtrend if you like looking through some of the names that don't often make the headlines there. Basically, I would say the wind sort of came out of the sails of some of these ones that have done well over the last couple weeks. Things like Carnival Cruise Lines. The airlines pulled back a little bit as well. United Airlines down about 4%. And then the ones I've already mentioned, Expedia and Booking Holdings. If we go over to the sector breakdown for the day, here you go. Let's take a look and see what we've got. Here's our list. This is available to all research members and clients of Jazz Wealth. On the left-hand side, we've got all the 11 S&P sectors in order, ranked by performance by day. Tech and REITs were the better performers today. A lot of what I'm about to say has to do with rates bouncing a little bit. If we go inside of tech there, you're going to see, I'll change this to 6 months so you can see the performance over here as it starts to recover just a little bit. But a lot of the gains today are coming, the gains contributed today coming from Apple and Microsoft, your big cap, large cap tech stocks, NVIDIA in there as well. And as you work your way down the list, you just see great day across the board. Very few stocks lower on the day. Many stocks not only higher, but had a really good day. So not a problem there. Also, semiconductors are going to be some of the bigger movers today. So if I sort by returns, there's all the names I've already mentioned, right? So in the tech space, that's what you got going on there. I want to point out back on our sectors list here, industrials. So if we look at industrials, kind of a flat day overall, but I'm going to go over here. We'll just take a look at the performance lately. Doing okay. It's not a headline type sector there, but gains today come from Kansas City Southern and your other railroad company, CSX. Kansas City Southern is actually getting bought out and be kind of an interesting transaction there, but we'll cover that in a little bit. And so that's what's going on there. Financials pulling back just a little bit today. One of the worst performers overall in the S&P 500. That's okay. They've had a good run. They're the second best performer year to date. To see them pull back a little bit as rates started to pull back just a touch there, not a big deal. I'm going to look through and see to show that it's not just the big names. So it's not things like JP Morgan, Goldman Sachs, although they were in there. I'll give you an ETF you might want to take a look at if you like this. It's the better performing. It's the regional banks, KRE. This would be Think of names like Regions Financials, SVB Bank, which is SIVB is a ticker symbol, things like that. Those regional banks, PNC Bank and the like. Well, that's been the better performer. If you look around here at the KRE, Regional Bank ETF that only focuses on regional banks, they have outperformed the financials as a whole and the market, really. So more volatility here, just a touch more volatility. But if you're looking for that extra performance, that's where you might look. Let's go over to consumer staples, because this is one that I've been excited about. If you look at the 6-month chart, as consumer staples was falling, that one I thought was kind of interesting. It's tough to invest. It's not the most exciting sector ever, but I thought that was one of the more interesting areas. It has been recovering, looking pretty good there. And if we go through some of the gainers today, it's almost flat, by the way, year to date, so working its way back there. But if we look around, you're going to find things like Pepsi. It's actually not looking too bad. When you look at Pepsi, I mean, it's got some work to do, but back above the 200-day moving average, not too bad there. General Mills, which generally is not very exciting, well, look at that. Back above the 200-day, it's recovered more than half of its decline. It is leading the way in the sector. So all I'm really doing is I'm looking at the sector, right? I see that it's fallen. I see that it's gained about half, almost about half of its losses back from the previous high. And then we're looking at stocks that are outperforming that. Which ones are pulling that sector higher? That gives you a little list there. Also Kellogg. I kind of like Kellogg as well as far as being one of the leaders. It looks like it's trying to be one of the leaders there. If we go over here, it's not quite halfway back there, but not bad. A lot of volume on this move up here. A lot of interesting people wanting to play that one, so not too bad there. The excitement today, well, that pulled back some of this, comes from bonds. So we talked about this on Friday. I had actually put on a trade. We talked about it a little bit, selling some puts on the TLT. Well, bonds actually moved higher today. That means rates pulled back just a touch. Very oversold in the short term. I think it's a worthwhile kind of a bet to assume that they're not just going to collapse or rates aren't just going to skyrocket. So that is where a lot of your excitement was coming from today with bonds making the move that they did. All right, taking a look at new highs and new lows for the day. There's only 14 of them, and I'm going to I don't like that one of them's on the list, but we'll hope that it made a top here. So Discovery, new 52-week high, finished nowhere near highs, though. So that's a good sign there. You know that I'm short Discovery. I actually need this to fall a little bit more, but that one looking strong. I just wouldn't. I think it's hard to try to be long Discovery right here. The rest of them are kind of technical in nature. Lowe's breaking above a recent range here. It's been sleepy for a while. Remember, Lowe's was outperforming Home Depot for the longest time there, which is odd, by the way. We talked about that numerous times. And now Lowe's is waking back up, going to new highs there. So if you compare that to something like Home Depot, it's once again ahead of schedule. Normally, Home Depot leads the way. Lowe's is doing its thing. Tractor Supply also hit 52-week highs today. Just ever so slightly breaking above this range here. Momentum building in Tractor Supply if you like those momentum plays there. Motorola, MSI is a ticker symbol. That one also interesting break above this range here. You got a series of higher lows. It took a couple month break, not very exciting. And now you got good volume, good action, and it closed near highs of the day on MSI. So one of the more interesting 52-week highs today. And then Cisco, I don't know. I don't normally look at Cisco. It's kind of a slow and steady, stock to play. It's a little bit tricky depending on how you want to play it, but strong. Their move to the cloud, right? Cisco, Oracle, all these guys starting to catch up there just a little bit. So that one on a 52-week high list today and not looking too bad. We'll do stocks in the news now here for you. All right. Tesla, up $15 today. If you like the ARK investment ETF, by the way, there was a number of articles out this weekend about another ETF that has a similar approach, not exactly, it's more index-oriented, but is just blowing the doors off of ARK Investment Group, or ARK ETF, the innovation fund. So anyways, ARK says Tesla is going to go to $3,000 a share by 2025. What is the difference between an ETF having a price target and a human being on Reddit or Twitter suggesting a stock will go to a certain price? Why does that person get in trouble, a lot of trouble, and why does this person say just be called an analyst and it's okay if they have a price target? It's all time. The only difference at the moment is time. ARK Investment says by 2025, we think it'll be a $3 trillion company. It'll be at $3,000 a share. A guy on Twitter or Reddit posts that he thinks some stock's going to go to some number by the end of next week. That's considered a pump and dump. what's the difference? It's just time, right? So there's a bit of a discussion happening right now in the markets, but that's what's going on there. Some sad news here for me. I don't know if I can say it. Roku shares higher by about 2.5% on the day. They bought the rights to This Old House. That's sad. Cody, do you ever watch This Old House?
I've never even heard of it.
What?
This old
This
house?
Old House. Who's heard of This Old House? All right, maybe you got to be of a certain age. When I go home and I eventually stop for the day, I watch Pluto, which is a free thing. We don't have cable. I don't watch enough TV to pay for it. So I go on Pluto, and there's a whole channel that's just This Old House reruns. They just fix houses. They're smart guys, plumbing and electrical and stuff. You learn a little something there. And since I'm currently remodeling a house, I'm like, all right, I watch This Old House. I've come to love these guys. It appears that Roku's gonna take it away from me because now they have the rights. So I don't know. I don't know what I'm gonna do. But all right, let's move on. Netflix. So Netflix higher on the day, just ever so slightly there. Where was my notes on this one? There was an analyst that came out and they did a study. It was from Citi. I wanted to get the right. An analyst from Citi says people sharing passwords on Netflix cost them about $5 billion a year, and that's something that they need to address. They know that. They're trying to address it, and they've gotten better at it, admittedly, but up 2.5% on the day because that brings that back into the light, makes them have to maybe get people to stop sharing passwords. All right. Moving on, other stocks in the news there. AstraZeneca breaking above the 50-day moving average, still very much in a downtrend there. They say that their COVID vaccine is actually 79% effective in their new U.S. trials that they've gotten their research back on. Good news for them, of course. Everybody would like to see it, obviously, as successful as possible, and that's what you have there. And then if you read Barron's over the weekend, they've got some good articles there that they like to talk about individual stocks. They gave Lockheed Martin the thumbs up there. They said if you're trying to play the space exploration travel sort of technology space there, that Lockheed Martin is your, quote, safest way to play that. It's not a sector. We'll call it space, that area. So Lockheed Martin, a little bit of a bump on the day, and that's what you have there. Also, I have to take back a comment here. A company called Hexo. They're in the goofy stock business there. They are the first goofy stock company to actually turn a profit. I've been ragging on these guys for the longest time that, it's tough. You have to believe in future profits and obviously legalization and everything. They do $32 million in sales. Earnings came out on Friday, I believe. $32 million in sales. They make a profit of $202,000 before interest, taxes, EBITDA is how you say it. It's $202,000. There's not a lot of money on 32 million, but it's a profit. They figured it out. And you know how they did it? CBD soda. I don't know if you're into CBD soda. I've never even heard of it, but that's what they do there. It's still a profit, so I've got to walk back my frustrations against some of these stocks. They've got a profit on the books. Let's see if they can keep that going. They've also taken the approach of they want to show a profit. They don't want to keep reinvesting every last dollar. They are reinvesting a lot, but that's what you have there. And finally, companies raising more dough. There's so many of them. Just incredible how many companies are raising, borrowing, or otherwise selling more equity in their company to get dollars in their pocket. Hilton, Crown Castle, JetBlue, Redfin, SVB Bank, SIVB, TripAdvisor. That's just a handful of them. I type them out when I see them, and I'm like, I'm done typing. I don't want to type anymore there. So that's what you have going on there. And if you or your wife or your family has a Cricut and you guys do those little arts and crafts together, they're going public. So if you want to invest in Cricut, I know nothing about them other than the machine that they have, but they are going public later this week. So there you go. That is that. Oh, office trades. Do we have a few of them here today? Did we load it up? Yeah, we got it here. Let's talk about a few of these. So me and Cody currently battling it out side to side on Crown Castle. I was long, he was short. I believe you have a profit on your position still too, right? Slight profit? Cody's got a small profit there. I hit my profit target today because I was on the long side, so Crown Castle just over a 50% profit there. Viacom is what I am waiting on patiently. Sold $100 calls on that one. I've got time, and if you check the roll, I've got plenty of time still. It's not pretty, but it's there. So that's what we got going on there. We talked about Discovery already, also giving me some grief. And Walmart, I don't think I didn't put my order in. Walmart has an exact 50% profit on that one there. Walmart was a strangle for me. 125 puts, 145 calls. And the reason why I'm talking so much about this, so each one of us has a different area of expertise and different area of knowledge. So everybody's kind of helping each other learn. And I like this side of things, the option side of things, the geeky side of things there. And so I'm just kind of trying to put on different trades to share that with them. Also, as we experiment with our office trade segment in our research portal, I want to have different types of trades so that everybody can learn something. So it's less about follow the guy because he seems to be making money, or Cody's on a hot streak, or Charlie's killing it, but more about why is that happening, so that if you see that, you can go take the same action and confidently know what your risk is, margin requirements, and all that great stuff. So that's Walmart. I could actually close that one out here soon. And then the last ones there, we didn't get any Charlie's plays. Charlie, you got to put some of your plays on the list there. Charlie's doing good. So he's got a better entry on Discovery than me. You got a 50%. Oh no, you're still working on that one. NRG, that was your long one, right? He did a weird kind of a hybrid strangle there, and that one's got a nice profit as a whole there. I see you're only left with your puts. You got your calls taken out there. So essentially, he's just long neutral on NRG at the moment, looking good there. And then the last couple there is actually what our class was about this last Thursday. Did a sort of a hybrid pairs trade on growth versus value, and we used ETFs for that. And if you don't know what I'm talking about, and you're one of our clients, go into the dojo, look at last week's video, the Wine and Wealth class. What I was doing was essentially betting that growth would overtake value, and so it was an interesting kind of a trade there. Both of those are playing out perfectly at the moment, where growth is starting to outperform and value is starting to pull back a little bit. I'm happy with that. That's what we have. Do you want to hear about these? Like, let me know if the whole office trades thing. I see some of you are like, yeah, it's cool. Some of you don't really care. We don't have to have that segment. I'm just testing it out. So let me know what you think there. I'll let the stream catch up. We'll take your questions here and then do what we do. Get back to work. Oh, while it's catching up, I'll tell you a little bit of earnings coming up. Adobe and GameStop. Huh? How's that for excitement tomorrow? That'll be after the markets close tomorrow, but I know the GameStop one will certainly be getting some attention. Adobe as well. It can be a fun one on earnings there. And then this is also the week with the big shift in today. Oh, right now it's happening. The big shift in the S&P with Penn National, Generac, and Caesars being added to the S&P 500 there. Yeah. Oh, yeah. Mm-hmm. What? Oh, and in the notes from Jazz this weekend, we actually covered the idea of why. Miriam's asking, why is higher interest rates bad for tech? So a lot of tech companies are counting on the future cash flow for their business. Higher rates. Right? So we kind of covered that in the letter there, but it's not as much of an impact, but the way tech positions themselves today is betting on the future cash flow. It has, obviously, inflation is an issue there as well. And I missed the question, wherever it went. I missed whatever the question was there. I am sorry. What's up with the Turkish lira? And it's telling us what to do come for the dollar. I don't follow currencies much. I've just never been excited about them. I don't hate them. I don't have a problem. I don't really get excited about them. And it's kind of like biotech. I don't want to focus on that much. There's already a lot to focus on. So at some point, I have to say, like, all right, certain IPOs, not going to look at them. Biotech, not going to look at them. You got to find where you're at so you can keep up with what's going on there. You like the office trades there? Office trades, interesting. Yep. If a company in the portfolio sells shares, no, it's not necessarily a red flag, especially right now, because companies are actually able to do this and not take a hit. Historically, if a company decides they're going to sell shares, the stock gets repriced, and that's just a nice way of saying it falls. That's not happening. People are just loving it, and they're soaking it up. So it's actually been a bit of a boon for some of the performance standards of our portfolios. I'm happy with that. You're long on Boeing. 215, sold 265, planning to enter again, 240, 230. Nice. Yeah, it's good times out there. Good times out there for the and that's odd to see that you said you're long, Tanger. I love it. Is NUE a healthy pullback? There you go. No pullback there. So help me out. Maybe it's the wrong symbol. So if you want a healthy pullback, okay, yes, I could agree with that. This is only day one. Never do anything on day one. That's actually that's going to be one of our trading classes that we do for clients. It just hit me, so I'll think about this. But what is a pullback? At what point do you say it has pulled back? Like, I wouldn't say right now Nucor has pulled back at all. It's still in an uptrend. Everything's nice and solid. But at what point do we say, okay, it's pulled back, I'm interested in some idea, right? Where does the switch flip? I could run with that. Yep. Are you against building a portfolio for the long term? You're already talking about profit and moving on. So what we do here is all long-term investing, retirement-based, long-term focus. All of our portfolios are long-term, and they're over here. Day to day, we just like the markets, and we're always looking. So personally, it's a corporate account. We're all just trading for the fun of it. While, let's say we adjust a position on something that we have long term, then a couple days later we go, hey, I don't know, maybe it's worth a trade in the short term. So let's make sure we keep those separate. I don't want people to think we're active. But yeah, we just enjoy doing a little bit of both. And so what you see like on the website and what our clients are participating in, all long term focused. Oh yeah, I love it. Thank you for the knowledge, Jack. You're very welcome, man. Been watching for a year and a half. Oh man, it's been a year and a half. Whew. Oh man, it's been longer than that. Actually, the reason I was about a minute late, I was on the horn with YouTube, just making sure they know we hit 100,000 subscribers and we did this in good standing. We're gonna get a plaque, so they're gonna send the code shortly, and hopefully we'll get a plaque. I'm gonna hang that sucker up, man. That's the only reason I do this, is for the plaque. No other reason. That's sarcasm for the kids. I love it. I love it. I love it. Yeah, the new puppies, you know, keeps you up a little bit, but it's good. Keeps you active. Mm-hmm. All right, I'll wrap it up there, and good one today. All right, hey, we'll be back tomorrow to do this all over again. I appreciate you joining us, and we'll just keep it rolling. Enjoy your day. When you wish upon a star, makes no difference who you are.